Hi there. I hope you're all keeping well. It's good to see that certainly in New South Wales, COVID-19 related restrictions are beginning to ease, and that very slowly we are soon returning to the new normal, whatever that's going to be. On a more urgent note, it's just a few days away from the end of the 2020 financial year. And therefore, I thought that I would use today's chat to talk a little bit about the Zagga Feeder Fund, as it presents an opportunity for those of you with some surplus cash to perhaps deploy that in the next few days and to maximize your returns, not only for the end of this year, but also for the new year going forward. We started the Zagga Feeder Fund in January 2019. It shouldn't really be called a fund because what it is a pooled, fractionalized investment trust structure. It really mirrors the Zagga Investments lending structure that we use for you to invest on a loan-by-loan basis. But instead of you investing in the loan, the Zagga Feeder Fund invests in the loan, and you have your fractional share of the Zagga Feeder Fund's interest in the loan. Other than that, there are no differences. You earn exactly the same return from the loan as you would otherwise, but in the feeder fund, you earn interest from the day you invest your money until the day you take your money out, whether or not the fund is actually invested at all. So you have the benefit of being continually invested over the full duration of your investment. Whereas if you invest on a loan-by-loan basis, you have to play the timing of each individual loan. For that reason, many of our investors have either decided to fully invest in the Zagga Feeder Fund, alternatively, to put some of their investments into the feeder fund and to then invest individually on a loan-by-loan basis as suits them. Now, in order to invest in the Zagga Feeder Fund, we need a minimum investment from you of $250,000. But you need to understand that for investments under $1 million, we do charge a small admin fee. If you invest over $1 million, then there are no fees, and the return that you get from the fund is your net return. Obviously, if there are fees, then we will deduct those fees from your return. And of course, if you're an overseas investor, as with any other investment, we have to deduct non-resident withholding tax, which at this stage is 10%. Now, the way that the fund works once you're invested is we lock up your money for 12 months, and you then get liquidity based on 90 days notice. So at the end of 12 months, you give us notice, and then we pay you out at the end of that notice period. That assumes that you want to get your money out. If you don't want to get your money out, you're welcome to keep your money invested and to roll your investments. From a distribution point of view, we pay distributions 6 monthly. So you get a distribution paid in January for the 6 months ended December of the year, and a distribution paid in July for the 6 months ended June of the year. Other than that, the fund is pretty simple. And the way that we look at the fund is it's not there to shoot the lights out. As you all know from your investments with us, we're conservative. We're far more interested to make sure we can get your money back and to earn you a clean, transparent, conservative return rather than trying to get the best return possible. So the way that you need to look at your investment in the fund, and indeed with Zagga generally, is as the middle of the road investment. It's either going to act as a floor for any of your high risk investments where they may not come off. And if they do come off, then you're simply going to get the benefit of the added return. Alternatively, you know that this is an annuity style investment and it's as good as cash or near cash. So you need to look at it from that point of view. Interestingly, as we all know, interbank rates have come down over the year from 1% to 0.25%, 25 basis points. So if you have a look at the target return for the Zagga Feeder Fund for this year of 8%, you're actually earning 7.75% higher than the interbank rate. And that in and of itself is a very good return. If you have a look at the return that some of the other managed funds out there are publishing, and there are a number of them, then our return generally exceeds that. So all in all, your investment in the Zagga Feeder Fund is a pretty good one. Once the fund is invested, the fund must get out of a deal after 90 days. It cannot hold more than 100% of a loan for more than 90 days. It may hold less than 100% after 90 days. And we're about to publish the Zagga Feeder Fund update, and you'll see from there that we have a spread of exposure to loans from 100% on some of the new loans to 100% on some of the loans that are in the process of discharging, and in between that, anywhere between 50 and 7 or 8%. Depending on the status of the loans. I'm also pleased to say that we will exceed our targeted return of 8% for the year to 30 June 2020. We're going to actually return just over 8% at 801%, which actually equates to a return of 7.55% for the 6 months to 30 June. That number is still to be tested by our auditors, so don't take it as gospel, but it's a strong indication, and we look forward to paying the distribution for that during the course of July. In terms of that 801%, given where we are in the world, the recent disruption of the pandemic, the interest rate environment, and much more, we think that that is a very, very solid return for the year, and we're pretty proud of that. Okay, I think that's probably all I need to tell you for now about the Zagga Feeder Fund. Please, if you need any more questions answered, just reach out to us either by email or by phone. Have a look for the update that's about to come out. And as always, take care, be safe, keep well, until I see you in about 2 weeks' time.